During his initial presidency, Donald Trump introduced a series of tariffs aimed at China to address trade imbalances and safeguard U.S. industries. These measures included duties on a broad range of Chinese imports, escalating trade tensions between the two nations. The objective was to pressure China to reform trade practices, particularly concerning intellectual property and technology transfer. In his current presidency, Trump has proposed a 10% tariff on Chinese goods as part of his America First agenda, which emphasizes prioritizing American economic interests. This initiative seeks to reduce trade deficits and boost domestic manufacturing, with the administration defending these tariffs as necessary to combat unfair trade practices and protect national security. In addition to tariffs, the United States has implemented export controls to restrict China's access to advanced semiconductor technology. These measures include limiting the export of semiconductor manufacturing equipment and software tools to China, aiming to slow China's progress in advanced chip production and its development in artificial intelligence and other high-tech fields. U.S. policymakers have expressed concerns that China's advancements in these areas could pose significant economic and security risks. Despite these restrictions, China has unveiled an unexpected technological breakthrough that has sent shockwaves through global financial markets. Rather than retaliating with counter tariffs, China has focused on innovation, introducing a groundbreaking development in artificial intelligence that has drawn worldwide attention. Reports indicate that this advancement has elevated China's position as a strong competitor to the United States in the high-tech sector. The announcement has reverberated across global markets, causing stock values of major U.S. tech companies, including OpenAI, NVIDIA, Google, and Meta, to decline, reflecting fears of a shift in technological dominance. President Donald Trump described China's new AI platform, DeepSeek, as a significant challenge for American technology companies. He underscored the importance of U.S. firms prioritizing innovation to remain competitive in the global AI arena. While DeepSeek's launch disrupted markets, including a $1 trillion loss in value for the leading U.S. tech index and a record $600 billion single-day market value drop for NVIDIA, Trump noted that the platform's cost-efficient approach to AI development could inspire U.S. companies to innovate more effectively using fewer resources. Though details about China's advancements remain unclear, experts believe the development represents a substantial leap in AI capabilities, potentially in areas such as generative AI, machine learning, or quantum computing. This has intensified discussions about the global competition in artificial intelligence and the race for technological leadership between the two largest economies in the world. This analysis examines the implications of these developments on the U.S. market, focusing on the factors behind the sharp decline in American stock values. It also explores the impact of DeepSeek, the innovative Chinese technology that has garnered global attention, and evaluates why U.S. strategies to curb China's technological progress have fallen short of their goals. On January 27, 2025, U.S. financial markets experienced a historic downturn, driven primarily by developments in the artificial intelligence sector. The announcement from the Chinese startup DeepSeek, unveiling a cutting-edge AI model, raised concerns about the competitive landscape for U.S. tech firms. This development not only unsettled the technology sector, but also led to a broader reassessment of America's standing in the global AI race. The Nasdaq Stock Composite, which is heavily dominated by technology stocks, suffered a sharp 3.1% drop, marking its most significant single-day decline in over a month. The S&P 500 also fell by 1.5%, with substantial losses in the tech sector driving the decline. Meanwhile, the Dow Jones Industrial Average managed a slight gain of 0.7%, buoyed by strength in healthcare and consumer stocks, which offset the heavy losses experienced by the technology sector. During this period, the impact on major technology firms was particularly notable. NVIDIA, a prominent leader in semiconductors and artificial intelligence, faced a steep stock price decline of nearly 17%, erasing approximately $465 billion in market capitalization, a record-setting single-day loss in U.S. stock market history. Other significant players like Microsoft and Alphabet, the parent company of Google, were not spared, with both experiencing a 4% drop in their stock values. These declines underscored growing concerns about how these companies would adapt to competition from emerging Chinese tech firms. The market turbulence was largely driven by DeepSeek's announcement of an advanced artificial intelligence model that reportedly matches or exceeds the performance of leading U.S. technologies, such as those developed by OpenAI. What set DeepSeek apart was its highly cost-effective development strategy. Unlike its U.S. counterparts, which depend on cutting-edge hardware like NVIDIA's high-performance GPUs, DeepSeek managed to achieve similar outcomes using less sophisticated and more affordable resources. This revelation prompted doubts about the long-term viability of the high-cost development models traditionally used by American tech giants, leading to a significant shift in investor sentiment and a widespread reassessment of these companies' growth potential. DeepSeek, a Chinese tech firm founded in 2023 by Liang Wenfeng and Hong Zhu, has quickly risen to prominence due to its remarkable innovations in artificial intelligence. Previously relatively unknown, the company has rapidly established itself as a formidable player in the tech sector. Its latest innovation, the R1 model, has garnered global attention for its advanced capabilities. R1 is designed to process and generate human language with impressive accuracy, competing with state-of-the-art models like OpenAI's GPT. Additionally, R1 can analyze visual data, such as images and videos, making it highly valuable for applications in areas like autonomous vehicles, security systems, and content moderation. What truly distinguishes R1 is its cost efficiency. DeepSeek developed this groundbreaking model using domestically available technology and less advanced hardware, significantly lowering costs while maintaining exceptional performance. Co-founder Liang Wenfeng, an engineer with a history of innovative ventures, previously established a company that used artificial intelligence to enhance investment decision-making. The success of this earlier project provided the funding necessary to launch DeepSeek. Liang's vision emphasizes making advanced AI technologies accessible and affordable, challenging the industry norm of resource-intensive development. In a striking departure from traditional practices, DeepSeek has made R1 entirely open source, allowing anyone worldwide to utilize, modify, or expand upon the technology without cost. This move disrupts the conventional strategies of US tech giants, which often keep their AI models proprietary and tightly controlled. The decision to release R1 has sent shockwaves through the global technology industry, with major US firms like Microsoft, NVIDIA, and Meta experiencing combined losses exceeding $1 trillion in market value. NVIDIA alone faced a valuation drop of $600 billion. DeepSeek's bold strategy has sparked discussions about China's rapid progress in artificial intelligence and its implications for the future of global technology. Despite its achievements, DeepSeek's rise has not been without controversy. Concerns have been raised about potential government involvement in the company's activities, particularly regarding sensitive topics. Additionally, the open-source nature of R1 has prompted questions about its potential misuse, including unethical applications. Nevertheless, DeepSeek's resourceful and innovative approach has positioned it as a significant competitor in the global AI industry. The company has demonstrated that groundbreaking advancements are possible with limited resources, challenging the traditional notion that success in AI development requires massive budgets. Whether this represents a transformative shift or a temporary disruption, DeepSeek has undoubtedly captured the attention of the global tech community. The success of DeepSeek has also triggered substantial financial ripples across international markets. Leading US technology companies have experienced sharp declines in their market valuations. NVIDIA, a critical supplier of high-performance chips for AI systems, saw over 17% of its value wiped out in just a few days, amounting to a $600 billion loss. Similarly, companies like Microsoft, Meta, and Alphabet have faced significant stock price drops as investors reassess their long-term dominance in light of emerging competition. DeepSeek's model has forced a re-evaluation of the industry, with investors questioning the sustainability of high-cost infrastructure investments when smaller firms can achieve comparable results with fewer resources. These developments have reverberated across global markets, reshaping expectations for the technology sector. The emergence of DeepSeek has also revealed significant flaws in US policies aimed at curbing China's technological advancements. The strategy of relying on sanctions, export controls, and international alliances to limit China's progress has proven insufficient. DeepSeek's success highlights how Chinese researchers and engineers have innovated to overcome these constraints. By developing custom AI algorithms optimized for less powerful, domestically produced hardware, they have reduced reliance on high-end GPUs and Western technology. These advancements emphasize the importance of adaptability and ingenuity in AI development, showcasing China's growing capability to lead in this critical sector. China's focus on nurturing a strong talent pool has been a significant driver of its success. The government has heavily invested in educational and research initiatives, fostering a new wave of AI specialists. Many of these experts received their education at prestigious international institutions before returning to China, bringing back advanced knowledge and techniques. This phenomenon, often referred to as a reverse brain drain, has created an environment ripe for innovation and enabled the country to sustain progress in AI research and development, despite facing external pressures like sanctions and export controls. The U.S. export restrictions aimed to curtail China's access to advanced semiconductor tools, including equipment crucial for producing cutting-edge chips, such as extreme ultraviolet lithography machines. The premise was that denying these resources would stifle China's technological advancement in AI and other fields. However, the situation has proven more nuanced. China has shown remarkable adaptability by relying on older generation chips while devising software innovations that enhance their performance. For instance, Chinese researchers have optimized less advanced hardware to run sophisticated AI models effectively. This environment of constraints has also accelerated the growth of China's domestic semiconductor industry. Bolstered by substantial government support, Chinese companies have made significant strides in chip design and manufacturing, gradually reducing their reliance on foreign suppliers. The creation of DeepSeek's groundbreaking AI model is a testament to these efforts. Even without access to the most advanced semiconductors, the model's sophistication rivals that of its Western counterparts. These developments call into question the core assumptions underpinning U.S. semiconductor restrictions. The success of companies like DeepSeek undermines the effectiveness of these strategies and highlights the need for a more strategic and nuanced approach to navigating global technological competition. The rise of DeepSeek, which emerged with an initial investment of just $6.5 million, serves as a case study in how smaller firms can disrupt the global tech landscape. By introducing an AI model that rivals or surpasses those developed by major U.S. companies like OpenAI, DeepSeek has triggered significant repercussions in global markets. The resulting sell-off wiped out billions of dollars in market value for leading U.S. firms, including NVIDIA, Microsoft, and Alphabet. This outcome underscores critical flaws in U.S. policies designed to safeguard domestic industries from foreign competition. For years, the U.S. has relied on a combination of tariffs, sanctions, and export controls to curb the rise of competitors, particularly from China. These measures were based on the assumption that restricting access to advanced technologies would stifle innovation abroad while protecting American businesses. However, DeepSeek's achievements demonstrate the opposite, that innovation can thrive even in constrained environments. By leveraging creative engineering, cost-effective methods, and domestic resources, the company has not only overcome barriers, but emerged as a serious contender, challenging the dominance of well-established American tech giants. NVIDIA, one of the most prominent U.S. technology companies, experienced an unprecedented 17% drop in its stock price, translating to a $465 billion loss in market capitalization. This historic decline reflects growing investor doubts about the long-term competitiveness of U.S. firms in an increasingly global and innovative marketplace. The ineffectiveness of U.S. strategies lies in their reliance on outdated protectionist measures that prioritize containment over collaboration and innovation. Tariffs and restrictions were intended to create a strategic edge for domestic industries, yet they have often backfired, prompting foreign competitors like China to double down on self-reliance and invest heavily in their research and development. Companies like DeepSeek have thrived under these circumstances, proving that innovation is not necessarily dependent on access to the most advanced tools and resources. Furthermore, the reliance on tariffs and trade barriers has strained U.S. relationships with its allies and trading partners, further isolating its economy in a globally interconnected landscape. The frequent introduction of new tariffs by the current administration reflects a reactive approach to economic challenges, failing to address deeper issues such as the need for increased investment in education, infrastructure, and research. The extraordinary success of a relatively small Chinese company in disrupting major American businesses serves as a powerful reminder that global economic competition cannot be managed solely through isolation and protectionist policies. To ensure long-term competitiveness, the U.S. must adopt a more adaptive and inclusive strategy. By prioritizing innovation and collaboration, the country can turn this disruption into an opportunity for renewed growth and leadership in the global economy. Thank you for watching this video. We deeply appreciate your support and would love to hear your thoughts. If our content resonated with you or sparked inspiration, please like the video and subscribe to stay connected with our community. Your feedback is invaluable and helps us continue delivering meaningful content.